Well, welcome everyone. I'm Adam Miller, and I'm joined here with our Chief Operating Officer, Jim Fitzsimmons, as well as our EVP of Dedicated Services, Mark Deere. Thank you for joining our executive updates. We have a lot of topics to get to today, so we'll jump through those, and then we'll hope to answer some questions that you may have. So we have the chat line there that you can enter your questions in, and we'll try to group them into different categories because we may not have enough time to go through every individual question, but if there's questions we don't get to, please feel free to reach out to your leader and we can try to help answer any questions that you may have. But first I'll start off with a topic around the freight market. There's probably a lot of questions around what we're seeing in the freight market and the impacts that we're seeing around tariffs. And this is a question that we've had, many of our stakeholders ask us about, shareholders, some of our, driving associates, other customers, about what we're seeing in terms of our volumes. And we've done a lot of surveys with our customers to try to understand what their strategy is and how that may impact volumes moving forward, certainly in the near term. And as we've gone through these discussions, we've really seen that they've fallen into really three categories. With the first category being, hey, we're not changing our strategy. I think supply chains, many of our customers have learned supply chains are very difficult to turn off and then turn back on, and that can create a lot of disruption in their inventory levels, their ability to stock their shelves, and so there's many that have decided just to stay the path and not make any changes. That's probably about a third of the customers that we've surveyed. There's another third that are in more of a wait and see mode. So they're doing just the bare minimum to keep their inventory levels where they think they have to have them at, avoiding any additional orders that could cause some expenses related to tariffs. And so probably seeing a reduced number of shipments from some of those customers. And then there's another third that have made some changes already. They've adjusted their supply chains. They've really moved a lot of volume away from China, where there's the highest amount of tariffs. And so we've certainly seen their supply chains change, and we're working to adjust our network to accommodate where freight may be coming in the future. We also look at what to expect from a port standpoint, port volumes, and we get some feedback from the port of LA and Long Beach. And we are seeing that in May they're expecting to see a little bit of a lull in ships that are entering in and the number of TEUs, or the 20-foot equivalent units that will be delivered. They're probably at levels that are probably similar to when you'd have a Chinese New Year, where you see a normal slowdown from China imports. Now it does look like those volumes kind of bottom out in the middle part of May, and then start to pick up again as you get into the back half of May. So it does feel like we're already starting to see orders pick back up, at least projected orders, as you get into the back half of May. And hey, we'll see what happens in June. And so when we have this type of an approach where it's not necessarily supply-demand driven, it's more political, and there's a lot of uncertainty about where the environment's going to land, there is a natural slowdown of volume. Now, as long as the consumer remains stable and they're continuing to buy, that freight eventually has to move. Mm-hmm. And so although May seem kind of seasonally slow, we may see what we call a bullwhip effect as you get into, could be the back half of this quarter or maybe early into the third quarter, where a lot of goods will have to move to catch up the inventories that some of our customers will be living on while they are dealing with some of the uncertainties in the trade wars. So we know that this is a potential. Right now, April volumes were stable. As we get into May, even this week has seemed relatively stable to what we've seen in the past. But we know there's the risk that we could see some disruption in the near coming weeks. But we're going to be working very hard with all of our customers to find as much freight as we can to balance our networks out, position our equipment to any changes our customers have in their network, and to really be ready if we do see an influx of freight that comes in June or July. It probably depends on when some of these tariff agreements get finalized or when there's a little bit more certainty around it, and then our customers will adjust their networks accordingly, and we're going to stay very close to it. So, of course, we want to support our driving associates to have enough loads in the markets where we need them, and our salespeople, our account managers are working tirelessly to be able to do that. And I know there's some of the things that are out of our control. We're trying to predict, we're trying to anticipate as much as possible, and put us in the best position to have enough freight to support our driving associates. So just know that we're watching that very closely, and we'll make adjustments if we see things change. Anything you want to add on
I
the
think one
market?
thing I'll add is I get questions a lot of times on, why are we adding more drivers when, times have been obviously tough in the freight world. Just want everyone to know out there that we're not actually adding more. We're actually down year over year if you look at a seated truck basis. And we're doing that by design. So we're trying to control how many seated trucks that we have out there in the market. And then as things get, as they start to pick back up, hopefully, June, July, August, whatever that might be, then we'll start to grow, our seated count again. But just know that we're not adding more drivers and trying to spread the same amount of freight over more drivers. We're actually doing the opposite right now.
Yeah, and I'd say, Jim, we're doing something similar in dedicated, and I think most of our dedicated drivers have seen a lot of consistency from their view in the number of miles that you're getting on a weekly basis, your average weekly pay. We've really tried to balance that out. We're not carrying any extra drivers or extra trucks on our fleets. We're basically committing to what our customers are willing to pay for, and we've seen those numbers obviously fluctuate from the pandemic. And we've seen some fleet reductions and transitions, and just really looking for what's the best use of our resources. How can we keep our drivers productive? As far as Adam giving a great explanation on the market. We've also seen different other segments like our grocery business that's been really solid. Through the latter half of the last 2 years, as we reached the mid-pandemic there. And hey, grocery's been a big help in that, in helping balance out some of the losses that we've had. And our grocery drivers are doing a tremendous job, and we really appreciate that, and that helps us get fleet renewals with those customers, and really helps stabilize part of our business. So that's been a plus.
Yeah, there's a lot of our customers, a lot of the freight that we haul are consumer staples that are manufactured domestically. And so not impacted by some of the declines in the imports that we're expecting.
Right.
So not to say that we don't have any freight that comes from imports. We certainly do, but it's not the majority. It's a very small percentage, and so it'll have some impact potentially. But we feel like we're in a good position to be able to navigate through that. Yeah. Well, I want to move on to maybe some updates around technology that we're making investments in. Many of our drivers know we have converted to a new logging device. We're moving from the Zonar device to the Geotab logging device. We're now about 85% of the way through there. I think we're just about over 10,000 trucks that have the Geotab device. We're very excited about that. We believe it's a very dynamic device. It's much more stable. I think once you get to learn how to use it, I think it's easy to use. A couple things that we want to reiterate on the Geotab device is we need to make sure that we are certifying our logs every day.
Okay.
That is a common item that we get ticketed on by CSA and law enforcement, and so it's something that's really easy to avoid.
It's a violation.
It's a violation, yes, and so I think it's something that we really want to push our driving associates to get in the habit of, is just confirming your logs on a daily basis, and that'll allow you to now get your next dispatch. So that's an important item. We also want you to leverage the electronic vehicle inspection report that's available on the log. I think that's also a very important feature, and allows our driving associates to ensure that you have good, safe equipment that's roadworthy, and that you're documenting that with our log. And I think we've positioned the Geotab to be able to do that pretty easily. So make sure you're doing that on a regular basis as well. So we're excited about what that'll do to help our drivers be better equipped over the road, and to really track our hours in a very stable manner.
Yeah,
We
the,
also,
the less violations we have, the easier it is for our drivers. They're not going to
Absolutely.
get stopped near as much. So
yeah, the better our CSA score is as
Yeah.
a fleet, the less likely you're going to get pulled in and stopped.
that's right.
Yep. The other device that we're working on investing in the back half of this year is the Netrodyne camera. I know we've had some live streams about that, and we put out a notice about that. Again, just to reiterate, it is not an inward-facing camera, similar to the current Smart Drive. It is only outward-facing. We're really excited about this camera. We believe it better positions us to give good quality feedback to our driving associates, but it's not only negative feedback, but positive feedback. It's really built on the premise of giving positive feedback to our drivers, and a scoring system's built around the positive things that our driving associates are doing over the road. And so it's got machine learning, it has an AI tool, it allows you to self-coach. We're excited about what that means for our company and the ability for us to be as safe as possible over the road. We've got 350 of these units in our owner-operator fleet, and we've had very good feedback from that group. We'll plan to start implementing some of these units in the back half of this year as we get closer to our contract expiration with Smart Drive. So we look forward to the different technologies that we'll have in the cab that, again, gives you what we believe is a great experience in the cab with the latest technology and allows you to be as safe as possible. I also want to reiterate, as you have Geotab, as you have Netrodyne, it's also important to ensure that you are leveraging our Pointe app, particularly the navigation in the Pointe app. When you're in the navigation, that allows you to get the text-to-voice messaging, so you're able to hear your messages while you are driving. It'll also allow you to hear the weather alerts, some of the safety messages that will be coming over to our driving associates. So it's important that you get in the habit of leveraging the navigation that we provide in the Pointe app that's on the Geotab. There's also a few questions around the tablets and when we'll be refreshing those. Our goal is to have a cadence where we're refreshing probably 25 to 30% of our tablets every year. And so this year we're starting that, so you'll see newer tablets going into the truck. They'll have better bandwidth in terms of data. You'll be able to leverage them to watch videos on Swift University, some of the training tools. So some of the older ones can't handle the data that's required there. So we are in the process of refreshing those tablets, and it'll just be a consistent refreshment that we're doing probably every few years as technology continues to develop. So I just want to make sure we get the updates out to our folks around some of the investments we're making on the technology front. But now we want to turn to maybe Mark to give an update on dedicated.
Yeah, Adam. So in one word, I would say we're battling. We've had a challenging last 2.5 years as our customers have made decisions, to reduce cost and to potentially take some of their dedicated and make it, one way. And so, just like during the pandemic, we converted a bunch of customer business to dedicated. We've seen that fall off the last 2.5 years. So, hey, we're doing a lot of things right and very proud of our team. We're still an industry leader in dedicated, and we're very proud of that. And, we'll continue to work with our customers. We've got some great customers. They've been with us for decades, many of them. And, hey, we're there to provide solutions for that group and to, provide the most value we can to their operations and, help them with their objectives. But, hey, we like to win, and we haven't had as many wins in the last year as we would like. And so we're out there working hard every day. I know there was one question about, what is leadership doing to sell more dedicated fleets? And don't think for a minute we're not out there every day with our sales team, our operations team, everyone involved. Our dedicated pricing and fleet design, works really hard to give us the best proposal that we can for new business. And then our drivers, you can help us certainly, providing great service. We're at probably the best service level I've seen in my 10 years in dedicated. And it's just, we're getting accolades and awards from our customers. And it's really a good position to be in, especially when they look for a dedicated provider that they can grow with going forward. So let's take advantage of that. Help us reduce cost, wherever possible. every cost input is something that we're focused on right now, because hey, we're not getting it in rate from the marketplace. The market's just not allowing higher rates at this point, other than some renewals. So we've got to help ourselves with cost, and our drivers can certainly help us with that as well. So hey, I would say overall we're still very positive, and we're going to see some better results in the second half of the year, I think. And then it's all about what we make of it, that, and how we turn that into business that's favorable for Swift.
Yeah. I think, I would just add, dedicated is certainly part of our portfolio of businesses. We have a lot of it, and it becomes very stable, especially when you're in a challenging over-the-road one-way environment. Yeah. But it's also competitive, and we're out there trying to win. We're trying to keep the business that we have as well. And again, to your point of providing great service brings value to our customers, and if our drivers can do that, that allows us to protect the business that we have.
Yeah, we've had a lot of discussions recently about what can we do differently to grow our dedicated business, and one concept is our one dedicated platform, and really what that represents is we're not just dedicated. We can do a lot of different things. We can include other Swift lines of business and service. You like that prop there?
I was thinking maybe a gold chain. We get more to wear that around his neck.
But we can be more than one dimensional, and multitask and offer a single source solution as part of dedicated. So we call that one dedicated, and we're already seeing some success stories there. And I've got my warehousing shirt on as well, where we're combining our different services into one solution for our customers. So we've got several of those opportunities out there right now, and we're going to get some wins and help some customers with some pretty unique solutions.
Yeah, I think we have the ability to be very dynamic in the market, much more than some of our competitors, because of the different offerings that we have.
Yeah, and I do feel like when Adam made the comment about the bullwhip effect, I think we'll see the same thing with dedicated. At some point, it'll come roaring back where the opportunities will be there again.
Yeah.
Yeah, and it's not just Swift alone either. We've got our other KNX brands that we can leverage that have other expertise that's going to add values. Like our Knight partners that do a lot of dray business. Dray goes with warehousing and it goes with dedicated. Yep. And so we're trying to partner up and add business to our portfolio.
Yeah. All right, thanks, Mark. Jim, I was going to maybe have you touch on some of the new terminals that we have that we've rolled out now, and maybe some questions around fuel as well as owner-operators.
Yeah, so if you've been here for a while, about 4.5 years ago, we started doing a lot of remodels, and at that same time, we started looking at where do we want to expand our terminal footprint. So we've done a ton of remodeling, and if you've been out to our terminals, you definitely have seen the improvements we've done, and a lot of that focus was around the driver center and making sure the showers, the driver's lounge, the yard, everything there is dialed in for our drivers. And Phoenix is kind of the last building, right? I think we moved into this building back in 1996, if I remember right. And Adam said a few years back that, hey, we're not going to remodel the corporate office until every terminal gets remodeled. And so we still haven't remodeled it. We get a lot of pushback, which I always tell that story, then people kind of get it,
Yep.
But we're trying to put our money where our mouth is, and that's taking care of our drivers, our mechanics, and our office staff by giving you a great place to work. Some of the new terminals, the last, few months, we've been to Las Vegas is a brand new facility, turned out amazing. Mobile, Alabama, that was also a brand new ground up building. We opened St. Louis, that was an existing building we moved into, did a little remodel on that one. We've got Statesboro currently under construction, and then Houston as well as under construction. So those two will probably get finished later this year or maybe early next year, depending. Like every time we do this, we run into all kinds of delays as the building gets going. It takes a lot longer than you anticipate, but we're going to continue to get those buildings done that are under construction. We've kind of put a hold on any other remodels for right now until the market gets better, and as we get more profitable, then we'll continue to finish up the remodels on the buildings that had not got done.
Yeah, and I think we're pretty comfortable with where our terminal network is as well. As Jim mentioned, we've got Statesboro that we're still building out. But hey, we have plenty of room to grow into some of the terminals we have as well. But we're always looking at new locations where there's a potential to put a Swift terminal. I feel given the current market, it's we got a lot of room to grow in just our existing facilities.
Yeah, definitely, yeah. And if you're not aware, we've sold a lot of the extra trailers that we had, so that we're making room in our terminals, so that when you need a safe place to park for the night or the day or weekend, whatever it is, we want to make sure you always have a spot at each of our terminals. Now, keep in mind, I say always, like on Thanksgiving or Christmas, it's going to be a mess no matter what we do. But I feel like we've made a lot of headway the last 6 months cleaning out our yards to make sure we do have a safe place for you to park.
Yeah, and that was really based on some of the feedback we got from our driver surveys, where the availability of parking and how full our yards were a real concern. Where maybe 4 or 5 years ago was having enough available trailers. We invested in more trailers. Now the market shifted on us, and so I think we got some of those trailers back from our customers. But we're always adjusting our strategy based on what we're seeing in the market, as well as feedback that we get from our drivers.
Yeah, and let me hit on feedback while you mentioned that. So when we send the surveys out, a lot of the changes we do come from the survey feedback. And so it's critical that when you get these surveys from us, that you take the time to fill those surveys out, because we do go through those, and then we start to see patterns as we do that. When you think about thousands of drivers responding, it really draws attention to the areas that we need the most focus on. So continue to send that feedback to us. Let me hit on fuel. There's some questions about kind of questioning, why can't I just fuel wherever I want? Can the COM data cards be opened up to fuel basically anywhere? So how that works, and Adam, kind of have you help me tag team this, but how that works is we have negotiated rates with our vendors, and so it's what you see on the kiosk out front of a truck stop isn't what we're paying based on our negotiated rates. And so we've got minimum fuel levels we have to hit, and so we do give you some options where we have availability to give you options. And so I think we did that a few years back, where if the fuel was relatively close in price, and you got 2 truck stops in the same area across the street from each other, whatever it might be, and our cost is about the same, we give you the option of picking which truck stop you want to fuel at. Now, you might see like a different station that shows lower than where we have you fueling, but again, like I said, that's not the price we're paying. The system's always going to route you to the most optimal, best deal for Swift, and obviously fuel being a huge cost piece, we have to make sure we continue to manage that and ask that you follow the fuel route.
And also the prices can vary drastically between markets. So as you're along your route, we're going to ask you to fuel at the lowest cost along that route. I mean, you can go from state to state, and the cost can vary dramatically. And so again, we're trying to optimize, find the balance between convenience for our drivers, but managing the cost most effectively for the organization as well. And the better we can optimize costs, the more that we can provide and invest in our driving associates, in our facilities, and our employees. And so we ask you to work with us. If there's anything that you question, you can talk to your driver leader, your terminal leader. But again, we're trying to find the right balance between managing costs and providing flexibility for our drivers.
Yeah, and I'd say outside of safety, which is probably our biggest opportunity to reduce costs, and delivering on time, which helps us with our customers, fuel is probably the third opportunity that we have to really help ourselves.
Make a big difference.
And help, ask our drivers to help us help you. So.
Let me hit on the owner-op load board. So we've been talking about that for a while. It's developed. It's still continuing to be developed, but it is out. And every week we're adding a little bit, kind of a slow roll, but we are adding more loads into that owner-op load board. So if you're got questions about that, talk to your owner-op consultant. We can kind of give you more information, give you timeline updates as those come along. We're working on a market type pay versus a mileage pay. I don't know if you want to kind of hit on that, but I know we've talked about that a little bit, but we haven't got any kind of detail at all on that.
Yeah, we're still working through the finer details of this, but we're looking at a second pay option. So there's still the mileage pay that our owners would have available to them, but another market-based pay where we would look at our own data, third-party data, to create a market-based rate that adjusts as the market changes, and so that may adjust every week, and we'll take into account what's happening on the supply and demand front, And it'll be a rate that's defined from a lane pair. So it could be Phoenix to LA or LA to Phoenix, and it'll be the same rate in that one lane pair, regardless of the customer you're hauling for. Because I know there are some companies that do a percentage of pay, and that may vary. You can run the same exact route, but your pay may vary based on the customer that you're hauling for. And so we don't want our owners to feel concerned about trying to pick or trying to find who's the right customer to haul for. We want to set a rate that works for the lane pair that we believe is fair to the market and pay a percentage of that. So we're working through the details. We think we'll be testing this probably in the third quarter sometime, hopefully early third quarter, and have it available to our owners sometime maybe later this year, early next year. We think it's something to allow some of our owners who want to see the flexibility in the market, and hey, sometimes rates go up, sometimes they go down. You'll have other owners that like the consistency of the per mile rate that works regardless of the market you're coming in and out of. So we want to create another option there, and we're trying to do so very deliberately and to allow it to be another option for those who want to become an owner-operator or who are currently owner-operators.
All right, there's quite a few questions on pay, Mark, so maybe if you want to take a swipe at dedicated, then I can talk about OTR.
Yeah, so dedicated driver pay, and obviously it's important to our drivers. It's also important to us as well, and something that we monitor very closely. As many of you know, each contract we have with a customer for each fleet is different, and each driver wage package is built around the fundamentals that operate in that fleet. So it's not something that's across the board. Each package is unique. And we monitor those very closely. We also work with our customers where possible, over a multi-year deal. We have those discussions about, hey, does it make sense to increase driver pay? Can the customer support that? Can they invest in this fleet? And what amount would that be, et cetera? And many of you that were around during the pandemic, you saw that. We were able to go work with our customers and get pretty good increases for our dedicated drivers. Now that has fallen off some in the past 2 years due to the market conditions. And frankly, we haven't forgotten you on that front. But what we've tried to do and what we are doing is making sure you're getting as many productive miles each week as you can. We're also adding mentors, so there's another revenue opportunity there. And then, hey, on some of our fleets, there are more miles if you're willing to work an extra day or an extra shift, or take some longer runs, et cetera. So, there's no one answer that's going to fix or make sense for all of our dedicated fleets. But I want you to know that we're very conscious of that, and we'll when we can make positive changes and pass that along to our drivers, we'll certainly support that and keep you in the loop.
I'd say even there's the option to be a mentor.
Yeah.
If you're on dedicated as well as on over the
we're,
road.
We're adding mentors.
Yep.
We're a little short of our goal, and then we also have 100 open dedicated driving positions that are available if it fits a driver's need. And working with your driver leader and the placement office, we try to find the best fits to keep you here at Swift. So that's another option you can look at.
And then kind of similar on the over-the-road fleet, but the difference with over-the-road is that does have increments where based on tenure or miles, you continue to get an increase. But again, we were doing the blanket-wide, across-the-board increases back in 2020, 21 when we had the extra revenue. Obviously, as that dried up, the blanket increases have stopped. But with over-the-road, we do continue to do increases based on your mileage and your tenure. All right, here's another question, Mark. I'll let you take this one. There's a couple questions about different terminals that have been recently closed. I don't think they're terminals, they're more drop yards, like Martinsburg is one. I know Willows was another one.
Yeah, so in the event of both Willows and Martinsburg, they were used by dedicated, but they were also used by OTR as well. And they'd been in our portfolio for a long time, and it's never an easy decision to part ways with a terminal, especially when we have drivers, and equipment attached to that terminal. But hey, as a company, we're out making investments in new facilities that were discussed earlier. We bought a number of LTL facilities last year to grow that business. and we're trying to make the best return on investment that we can for our investors and for our money. So, hey, we had to make some tough decisions. We're working with the drivers that were based out of those facilities for alternate options for parking, maintenance, etc. And we should have contacted all of you by now. And hey, if we don't have a solution yet, we're going to continue working on that. But hey, those are never easy, and we're trying to do the right thing for both our drivers and our customers.
Yeah, I mean, I think we went through a strategic review of the property that we have and how well we're using it. And there was a few locations like Martinsburg and Willows where we just never utilized it as a full terminal.
Right.
And we did a market check on the value of it and made the decision it was better off to sell the terminal rather than use it in the way we were using it.
In the context we were using.
Right, and so, but we have a tremendous amount of properties across the country, an unrivaled network of terminals and drop yards that our drivers can utilize, and anything that's been disrupted, we're working on finding a solution.
Yeah, and plus the investment we've made in the renovations and the remodels. I mean, we've spent a lot of money on our existing facilities as well. So, hey, just we're conscious of the concern on some of those, but certainly trying to make the best business decision as well.
Yep.
Yeah, and if you have a unique situation, like I know we've made exceptions, we do the same thing here on the Swift side. If you live near one of our other sister companies, like say a AAA or US Express, Night, whatever it might be, you make exceptions. You just got to get with your terminal leader and find out, can we make an exception there where you could park your truck when you're on home time within a city. We're 1 minute over, so we'll let you guys kind of close it out.
Recap there?
Yeah, well, hey, but again, there's a lot of uncertainty in the market, and we're trying to understand the potential impact and try to get ahead of that and adjust our network to again support our drivers, support our employees. And hey, we just appreciate all the great work from the men and women that drive for Swift, that maintain our equipment, that support our drivers in the office. We have a great group of people here, and hey, I look forward to us overcoming the uncertainty here and what could be on the backside of this, which could be a nice lift of volumes. But hey, in the meantime, we need to hunker down, do everything we can to control costs, to find freight opportunities to support our network. And hey, I just feel humbled to be part of this great organization. So I appreciate everyone here that helps Swift be as great of a company as it is.
Yeah, very proud to be a part of this team. And, from a performance standpoint, hey, we're going to win. We're going to win a lot more down the road. As Adam likes to say, we need to be a top performer in every market. And, hey, we haven't had a lot of tailwind behind us for a while, but that day will come. But that doesn't mean we can't be successful now. So just appreciate everyone working as a team and doing everything you can in your role to help us be successful. And hey, as a team, we will win.
Nope, could have said it better. Thank you for all that you do out there. We appreciate you.